Good credit is essential to modern life, and here's why. Credit. Everybody has it, but not everybody knows what it means. And that's kind of worrying, because your credit score is more than just a number on a screen. It has a big impact on your life, shaping options available to you and the amount you have to spend to access them. So first things first, what is credit? In essence, credit is a record of your financial health. It's a collection of all the decisions you've made in the past, measured against an average for the nation, which gives you a score or a rating. How is your credit calculated? Lots of different things go into your credit score, like how much you owe, what products you've had, like credit cards, and whether you pay them off on time. While there are a lot of credit score models around, one of the most commonly used is the FICO model. This model provides you with the score between 300 and 850, with 850 being the highest. A score of 800 plus is considered exceptional, while 740 to 800 is very good, and while 670 to 740 is good, and 579 is poor. There's also Vantage Score, which is another big method of credit scoring. It similarly rates people from 501 to 990. In the US, over 61% of people have a fair Vantage Score or better. That means a few debts, but largely financially healthy and making good decisions. So that's some good news. But it begs the question, what does credit really do for you? Well, in this video, we're going to take a look. We'll be exploring 7 big benefits of having good credit before we take a deep dive into an example of the power of credit in action. Let's get started. You're more likely to get your loan application approved. That's number 1. Unfortunately, nobody has a right to borrow money, and that's why you have to apply to take out a financial product like a loan or a mortgage. Banks choose whether or not to lend to you based on a number of factors, including your credit score. And not being able to get loans could affect your business, your health. When you have bad credit, there's a greater chance that your loan application won't be accepted because lenders will consider you to be a risky borrower. And when you have good credit, the reverse is true. You'll likely be approved without many issues. As you can see, a good score is important to even gaining access to financial products. When you're without it, you can't even get your foot in the door, and you won't get a good, clear deal either, as we'll see in our second point. Number 2, you'll get a better deal from lenders. Having good credit makes you an attractive customer for lenders. They want you to use their products, so they'll try to entice you with the best deal. That can often mean a better interest rate on things like credit cards. But what does a few percentage point matter? It can represent a huge savings for you over time. Think about it like this. Taking out a 30-year fixed mortgage of $250,000 at a 5.5 interest rate will end up costing you $511,000 and another 10 added. But if you can get it the same deal with a 4.5 interest rate, just 1 point lower, you'll only pay $456,017. That's a difference of $54,993 across 30 years, all from 1 point decrease in the interest rate. But it's not just your interest rate that will benefit. If you have good credit, you'll be able to get your high-end credit cards that come with special bonus features like vouchers and discounts at your favorite stores, longer payback periods, and an initial 0% APR. Plus, you'll also get a better deal on your insurance premiums. Insurers have worked out that people with bad credit typically file more claims, so they charge you more if you show up with a rating on the lower end of the scale. All in all, it's pretty clear. Having good credit means you pay less and you get a lot more. And that takes us on to our next point. Number 3, you'll be able to borrow more. As we've seen already, banks and financial organizations make decisions based on your credit score and some other factors too. Having good credit shows you're good at managing your money, which makes you more trustworthy in the eyes of a lender. That's why higher credit ratings often mean you can apply to borrow a larger amount. This applies to loans, lines of credit, credit cards. Number 4, it's easier to rent or buy your home. You might think your score has no impact on where you live. Well, you'd be wrong. Good credit makes it much easier to rent housing, as more and more landlords are carrying out credit checks. If you have a damaged score, it can limit your chances of getting an apartment, especially if your bad score comes from an outstanding rental balance. Having good credit in your back pocket saves you the hassle of looking for a landlord who will accept renters with a lower rating. And it could also mean you save money on your initial security deposit. Oh yeah. Of course, it's the same story when it comes to taking out a mortgage. Having a strong credit rating is seen positively by the bank, so you're much more likely to get a mortgage and take your first step on your housing ladder, or even your third. Number 5, avoid paying security deposits on utilities. Who does that? Water, gas, electricity. These things are kind of important, but if you sign up to get a new utilities contract with a bad credit rating, they'll make you pay a large deposit to establish service. Again, that's because bad credit is a sign that you might not pay them, so they want some cash up front as an insurance. With good credit, you can avoid all this entirely. That brings us to the next benefit of good credit. Number 6, you'll pass employment background screening checks. They do that? In the US today, it's increasingly common for employers to run credit checks on potential new employees. In fact, one survey from the National Association of Professional Background Screeners found that 31% of employers ran credit checks on some applicants. while 16% check the credit of all applicants. It's especially common for these checks to take place if you're applying for a role handling money. What does these checks entail? It varies. They often look into credit, card debt, mortgage, car payments, student loans, your payment history on those debts and loans, including late payments. It's impossible to know your rights on this. According to federal law, your employer has to get your written approval before they do the checks, and they have to tell you if the report is used against you in the hiring process. But if you can maintain a good credit rating, you won't have to worry about this too much. And that surges neatly into our seventh, final point. Number 7, you're in a strong position to negotiate. Oh yeah, we do that. Borrowers with strong credit scores will be able to be in a good position to shop around because pretty much all financial products are open to them. Lots of lenders will want you to give them your customs, and you can use this as a bargaining power. However, if you got bad credit, banks are unlikely to budge on loan terms, and you won't have any other credit offers or options at hand. So we've explored 7 different benefits that come from having good credit. Now it's time to look at an example of credit in action. Let's say 2 identical twins go to buy a car. These 2 individuals, Jim and Joe, and identically in almost every way. They were born on the same day, have the same height, and even work at the same job and drive the same car. But Joe has always been careful to keep good credit, while Jim has not so much. Both of them decide it's time to buy a new vehicle. This is pretty expensive. The average transaction price for a car in 2019 was $37,185, according to Kelley Blue Book. To get this car, the boys need to take out a loan. Jim goes first. His credit is on the lower end of the scale, around 500. So when he asks for a full loan of $37,185, the creditors refuse him. Instead, they offer him a loan of $25,000 with an interest rate of 6%, much higher than average. When Joe takes his high credit score of 720 to the creditors, they are happy to lend him the full $37,185 with a lower interest rate of 4.7%. Not only does credit decide whether or not the boys will be able to borrow the full amount, it also changes their interest rate. And we've already seen those small numbers make a big difference. There are lots of ways your credit can shape your life, whether it's helping you rent, get a loan, avoid big deposits, or save money on interest rate over time. Good credit has a meaningful impact on the things you can do and can't do. It's pretty important to track your credit score, and if it's low, take steps to improve it. Of course, the first step is understanding how important your credit really is, which is something you've already learned in the course of this video. Thanks for listening. Hope to see you soon.